Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. So checking back in on natural gas, we know 311 is a double low of consolidation and a must hold. We formed a higher low this morning at 3118. So another test, another hold of that support. And then the bulls are trying to turn things around. So we are consolidating after that initial bull break. It's healthy consolidation, and we're looking for resuming the uptrend. For me overall, though, on the daily time frame, the bulls have to break 3228 to prove anything to me. So we are still a few pennies below that level, and why I'm choosing that level is because looking at the daily time frame, we know we have that bear break where we have this tightening pattern of lower high, higher low, so our clear bear break, and you can see we have multiple inside candlesticks on the daily time frame with the range just getting tighter and tighter each day that goes by. Likely to see a clear break of this tightening candlestick pattern tomorrow, and if not, we certainly will on Monday. So that level for me is important because that's the high of our initial bounce attempt, and any lower level is a lower high. If we can get above 3228, we know that the bulls have a bit of momentum in their favor in the short term, but if not, and a break of 311, clear bear signal for further movement to the downside, which will have us looking at 3061. So initial bearish reaction to the inventory report short term, and then the bulls showed up and had a really strong reaction shortly after, and then they maintained control. So the question is going to be, can the bulls break 3228 resistance tomorrow and get a bull break of those inside candlesticks on the daily? Checking in on UNG, you can see it's definitely a more bullish candlestick than yesterday, a bullish engulfing. We've got the 200-day moving average resistance to deal with of 807, and we could still be forming a bear flag little weak bounce attempt, which is why I still need the bulls to prove to me that that is not the case, because after such a drastic drop over a 3-day time frame, just this little weak 2-day bounce not really doing much in terms of the bulls proving their strength. So the weekly time frame is trying to hold this 50-week support of 784. That's the goal for the bulls to close above. They're looking pretty good, like they're going to be able to do that. And then we'll be watching the tightening channel. Here on UNG, it's the 50-week support, which is held twice now, and then the middle Bollinger Band resistance, which has rejected the price 3 weeks in a row. So that's the tightening range. You can see that middle Bollinger Band is descending. The 50-week is ascending. And we'll be watching tomorrow very close to that natural gas daily inside candlestick tightening range. We'll check back in tomorrow to wrap it up. I appreciate you watching. Have a wonderful night.